Preparing for a financial consultant at Charles Schwab interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you want to be a financial consultant at Charles Schwab. My background combines client relationship work, finance, and consultative problem solving. I'm drawn to Schwab because the financial consultant role is not just product sales. It is about helping clients make better decisions with transparent advice, open architecture, and strong planning resources. I would bring disciplined follow-up, active listening, and a goals-based mindset to deepen relationships, uncover needs, and connect clients with the right Schwab solutions over time. While answering, focus on your client-facing experience, interest in financial planning, alignment with Schwab's client-first culture, and ability to grow relationships without sounding purely sales-driven. Question 2. How would you build trust with a new Schwab client who has never worked with you before? Trust starts before any recommendation. I would first understand the client's goals, concerns, investment experience, family situation, and decision-making style. Then I would explain how I work, what Schwab can provide, and where I may bring in specialists. I'd be transparent about fees, risks, and trade-offs, not just benefits. Most importantly, I would follow up exactly when promised, because consistency is what turns an initial conversation into a lasting advisory relationship. Make sure to cover listening before recommending, asking discovery questions, explaining your process clearly, setting expectations, following through, and positioning trust as earned through consistency and transparency. Question 3. Walk me through how you would conduct an initial financial discovery meeting. I would structure the meeting around the client's life goals, not their account balance. I'd ask what they are trying to accomplish, when they need the money, what keeps them up at night, and how they have invested historically. Then I'd gather assets, liabilities, income, expenses, retirement timing, tax issues, and beneficiaries. I'd summarize what I heard, confirm priorities, and propose next steps, such as a financial plan, portfolio review, or specialist introduction. In your answer, talk about structured discovery, goals, assets, liabilities, time horizon, risk tolerance, income needs, tax considerations, family priorities, and converting information into a planning roadmap. A client calls upset because the market is down and wants to sell everything. First, I would acknowledge the concern rather than dismiss it. Market declines feel personal when they affect retirement savings. I'd ask what specifically changed: their goals, cash needs, risk tolerance, or simply their emotions. Then I'd revisit the plan, asset allocation, time horizon, and historical context. If the portfolio is still aligned, I'd encourage discipline. If their circumstances changed, we could adjust thoughtfully, perhaps raising cash or reducing risk without making an all-or-nothing decision. Be sure to mention empathy, de-escalation, revisiting the financial plan, risk tolerance, time horizon, avoiding emotional decisions, documenting the conversation, and offering practical alternatives if appropriate. Question 5. What are the key components of a strong financial plan for a Schwab client? A strong plan connects money to specific goals. I would include retirement income needs, savings rates, spending assumptions, investment allocation, tax considerations, emergency liquidity, estate planning basics, and protection needs. The plan should also show trade-offs, such as retiring earlier versus saving more or taking less risk. I see the plan as a living document, not a one-time report, because markets, family needs, tax laws, and client priorities change over time. While answering, focus on goals-based planning, retirement projections, cash flow, investment allocation, tax awareness, estate considerations, insurance needs, risk management, and regular updates as client circumstances change. Question 6. How would you discuss asset allocation with a client nearing retirement? For a near retiree, asset allocation is about funding income while managing downside risk. I'd start with spending needs, Social Security timing, pensions, cash reserves, and how much flexibility they have. Then I'd separate short-term liquidity from longer-term growth assets. A client retiring in 2 years may still need equities for a 25-year retirement, but the portfolio must handle volatility. The right allocation balances emotional comfort, income stability, inflation protection, and long-term sustainability. Make sure to cover time horizon, income needs, sequence of returns risk, liquidity, diversification, risk capacity versus risk tolerance, and avoiding a one-size-fits-all stock-bond answer. Question 7. How do you balance sales goals with doing what is right for the client? I don't see client interests and business goals as separate when the role is done correctly. If I understand needs deeply and recommend appropriate solutions, revenue follows from trust and retention. I would never force a product to hit a number, because that damages the relationship and creates compliance risk. My approach is to identify real planning gaps, explain options clearly, document the rationale, and let the client make an informed decision. In your answer, emphasize client-first advice, long-term relationship value, suitability or best interest standards, needs-based recommendations, ethical sales discipline, and why trust drives sustainable revenue. Question 8. What does acting in a client's best interest mean in a financial consultant role? Acting in a client's best interest means recommendations must fit the client's goals, risk profile, time horizon, liquidity needs, and financial situation. It also means explaining material costs, risks, alternatives, and conflicts clearly. I would document why a recommendation makes sense and avoid steering clients towards something simply because it is easier or more profitable. In practice, best interest is both a regulatory standard and a daily behavior built into every client conversation. Be sure to mention understanding client objectives, reasonable basis for recommendations, conflicts disclosure, cost awareness, documentation, regulatory expectations, and putting client outcomes ahead of convenience or compensation. Question 9. How would you identify opportunities to refer a client to Schwab specialists or additional solutions? I would listen for triggers during discovery and ongoing reviews. A business sale may create tax and estate planning needs. A concentrated stock position may require risk management. A retiree may need income planning or managed solutions. When I identify a gap, I'd explain why a specialist could add value and coordinate the introduction. The referral should feel like an extension of advice, not a handoff or sales pitch. While answering, focus on discovery-driven referrals, recognizing planning triggers, partnering with internal experts, avoiding product pushing, and improving client outcomes through coordinated Schwab resources. Question 10. A client says their portfolio underperformed and blames Schwab. How would you handle the conversation? I would start by letting the client fully explain their frustration. Then I'd clarify what they are comparing performance against: a benchmark, a friend's portfolio, or their expectations. I'd review the original objectives, allocation, risk level, fees, and market environment. If the portfolio performed as expected for its strategy, I'd explain that clearly. If something needs adjustment, I'd own the follow-up and present a practical plan to realign the portfolio. Make sure to cover staying calm, acknowledging frustration, reviewing benchmarks and objectives, distinguishing market performance from plan suitability, explaining attribution, and agreeing on action steps. Question 11. How would you explain the difference between a self-directed account and a managed account? A self-directed account gives the client full control over investment choices, trading decisions, and ongoing monitoring. It can work well for experienced investors who want flexibility and involvement. A managed account delegates day-to-day portfolio management to professionals, usually for an advisory fee, and may provide more discipline and oversight. I'd explain both objectively, then ask how much time, confidence, and desire the client has to manage investments themselves. In your answer, talk about investor control, professional management, fees, suitability, time commitment, emotional discipline, customization, and matching the solution to the client's preferences and needs. Question 12. How would you help a retired client think through generating income from their portfolio? Retirement income planning starts with the spending gap after Social Security, pensions, and other income sources. I'd look at essential versus discretionary expenses, tax location of assets, required minimum distributions, and cash reserves. Then I'd discuss whether income should come from dividends and interest, systematic withdrawals, or a total return approach. The goal is not simply maximizing yield. It is creating reliable cash flow while preserving flexibility and reducing the risk of outliving assets. Be sure to mention withdrawal strategy, cash reserves, dividends and interest, total return, taxes, required minimum distributions, Social Security, sequence risk, and sustainability over retirement. Question 13. How would you grow and deepen a book of business as a Schwab Financial Consultant? I would grow the book by being systematic and client-centered. First, I'd segment clients by complexity, opportunity, and service needs. Then, I'd schedule regular review meetings, identify life events, and follow up on planning gaps. I'd also partner closely with branch team members, service representatives, and specialists to create a coordinated experience. Referrals come when clients feel heard, organized, and better off after every interaction. While answering, focus on proactive outreach, segmentation, review meetings, client referrals, branch partnerships, service quality, planning conversations, and turning transactional interactions into deeper relationships. Question 14. A client has a large concentrated position in one stock with significant unrealized gains. What would you discuss? I would first understand why the position exists: employer stock, inheritance, long-term conviction, or tax concerns. Then I'd quantify the concentration risk and discuss what could happen if that single stock declines sharply. Because there may be large unrealized gains, I'd avoid a quick sell recommendation without tax analysis. Options could include stage diversification, charitable giving, tax loss harvesting elsewhere, or specialist input. The key is reducing risk thoughtfully, not ignoring taxes or emotions. Make sure to cover concentration risk, tax implications, diversification, client attachment to the stock, staged selling, charitable strategies, hedging possibilities, and involving tax or planning specialists. Question 15. What do you understand about Charles Schwab's value proposition to clients? Schwab's value proposition is built around helping investors take ownership of their financial lives with strong service, transparent pricing, broad investment access, and planning support. The firm has a reputation for lowering barriers for individual investors while also offering deeper advisory and wealth solutions for more complex clients. As a financial consultant, I'd reinforce that value by being consultative, clear, and practical so clients feel Schwab is both accessible and sophisticated. In your answer, mention client-first culture, low-cost investing, broad platform access, planning tools, education, service model, transparency, and Schwab's reputation for empowering individual investors. Question 16. How do you prioritize your day when you have client meetings, follow-ups, compliance tasks, and prospecting goals? I prioritize based on client impact, deadlines, and revenue opportunity while never letting compliance slip. I'd start the day reviewing scheduled meetings, urgent client issues, pending paperwork, and required follow-ups. Then I'd time block proactive outreach so prospecting does not get pushed aside by reactive work. I'm disciplined with CRM notes and next steps because missed follow-up hurts trust. The best consultants run their day like a pipeline and a service operation together. Be sure to cover organization, urgency versus importance, client impact, regulatory deadlines, CRM discipline, time blocking, follow-through, and protecting time for proactive business development. Question 17. Tell me about a time you exceeded a goal in a client-facing or sales role. In a prior client-facing role, I was asked to increase qualified client conversations by 20% in a quarter. I built a weekly outreach list, personalized each contact based on prior interactions, and tracked every next step. Instead of pitching immediately, I asked about goals and unresolved needs. That approach led to stronger conversion, and I finished roughly 35% above target. The lesson was that disciplined activity works best when paired with genuine discovery. While answering, use the STAR method. Quantify the goal, explain your actions, show consultative behavior rather than aggressive selling, and connect the result to repeatable discipline. Question 18. Describe a time you faced an ethical or compliance-sensitive situation. In a past role, a client wanted to move quickly on a request that required additional verification. I understood the urgency, but I also knew skipping steps could create risk for the client and firm. I explained the requirement calmly, escalated to the appropriate team, documented the interaction, and followed up until it was resolved. The client was initially frustrated, but later appreciated that I protected the process rather than taking shortcuts. Make sure to cover recognizing the issue, slowing down, asking for guidance, documenting facts, protecting the client and firm, and choosing the right action over the easy action. Question 19. How would you explain fees to a client who is skeptical about paying for advice? I would welcome the question because fees should be clear. I'd explain exactly what the client pays, how it is calculated, what services are included, and what alternatives exist. Then I'd connect the fee to potential value: planning discipline, portfolio oversight, behavioral coaching, tax-aware coordination, and time saved. I would not imply advice is free or guaranteed to outperform. The client should understand the cost and decide whether the service is worth it. In your answer, talk about transparency, value for cost, services provided, alternatives, conflicts, long-term planning benefits, and letting the client decide based on clear information. Question 20. Why should Charles Schwab hire you for this financial consultant role? Schwab should hire me because I combine client empathy with commercial discipline. I can build trust, ask strong discovery questions, explain financial concepts clearly, and follow through consistently. I understand that the role requires advice, service, compliance awareness, and business development, not just market knowledge. I'm coachable, organized, and motivated by long-term relationships. My goal would be to help clients make confident decisions while contributing to Schwab's growth and reputation. Be sure to mention your relationship skills, planning mindset, integrity, business development ability, learning agility, alignment with Schwab's culture, and readiness to handle both advice and goals. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.